you're starting a business or thinking about it, one of the first questions you'll face is, which type of company should I choose? And trust me, it's a big deal. Whether you're running a small shop or trying to build the next tech giant or doing some good in the world through a non-profit, choosing the right business structure is the most important step at your beginning. And in this video, we're going to talk about different types of companies you can set up in India, the pros and cons of each, and how to figure out which one is the best for you. Sounds good, right? So let's get started. Alright, so first things first, what are your options? Well, there are a few and they all come with their pros and cons. You have got sole proprietorship, partnership firm, limited liability partnership or LLP, one-person company or OPC, private limited company, public limited company, and lastly, Section 8 company. They pretty much sound the same or at least confusing, right? Believe me, they are completely different and we are going to break each one down so by the end, you will know which one is the right for you. So let's get started with the simple one. Sole proprietorship. If you're a one-person operation, say you're a freelancer or running a small shop, or maybe even starting a home business, this might be where you start. It's super easy to set up. In fact, you might not need to do much at all except start working. So here are the pros and cons. Pros. You are the boss, so complete control over everything. No complex paperwork and it's super easy to set up. Cons. Unlimited liability. Yes, if things go south, your personal assets are on the line. Everything from your car to your PlayStation. And second, raising money as a sole proprietor is tough. Investors and banks don't love sole proprietorships because there's no separation between them and their business. So if you're testing the waters or doing something small scale, this could be your best bet. But remember, it has its own risks. But if you're not a one-person operation, there are partnership firms. If you've got one or more people you want to team up with, this is a classic option. In a partnership firm, you and your partners share the profits, responsibilities, and yes, the risks. So here are the pros and cons. Pros. Shared responsibility, which means you're not doing everything alone. And it's easy to set up with a partnership deed, which is a legal document that outlines how you'll share your profits and who does what. Cons. Unlimited liability. Just like a sole proprietorship, your personal assets are still on the line. And conflict can happen between partners. Sometimes you won't see eye to eye and things can get sticky. Partnerships are great for small businesses where you trust your partners. So make sure you all agree on how things will work. Since we're talking about partnerships, there's also limited liability partnerships or LLPs. If you're thinking, I like the sound of a partnership without the whole unlimited liability thing, LLP might be your sweet spot. So here are the pros and cons. Pros. Limited liability, which means your personal assets are safe even if the business has debt. And you still get that flexibility in running things but with more legal protection. Cons. There's a bit more compliance compared to a regular partnership, but nothing too crazy. But it's not ideal if you're looking for big-time investment. LLPs aren't as attractive to investors as companies are. LLPs are perfect for service-based businesses, consultants, and firms where you want to keep things simple but safe. Now imagine if you want the perks of having a company but don't want to bring in partners. Solo entrepreneurs, I have just the thing for you. One-person company or OPC. Here are the pros and cons. Pros. Limited liability. Unlike a sole proprietorship, your personal stuff stays safe and you get the benefits of a company structure without needing a co-founder. And cons. You are limited in growth. An OPC can only have one shareholder. And compliance is similar to that of a private limited company, meaning more paperwork compared to a sole proprietorship. If you're running solo but want to keep your personal assets safe, an OPC might be your ideal setup. Up next is the company you must be most excited for, the private limited company. This is where you land when you're very serious about growth, raising funds, and building something bigger. So here are the pros and cons. Pros. Limited liability for shareholders. Your risk is capped at what you have invested. It's easier to raise capital from investors because they love the transparency and structure of a private limited. And you can have up to 200 shareholders, so there's room to grow and add as many investors you attract. And cons. It's a bit more complex to set up. To be honest, it's very complex to set up and you'll need to comply with more regulations, file annual returns, have board meetings and all that jazz. If you're looking to scale or attract outside funding, a private limited company is the way to go. And since we are going bigger, let's just get to the biggest, a public limited company. As the name suggests, it lets you go public, which means you can sell your shares to the general public and raise some serious capital. So here are the pros and cons. Pros: unlimited growth potential. You can raise funds from the public by getting listed on stock exchanges, and there's more credibility and transparency which can help with funding. And cons, the compliance is intense. Financial transparency, regulatory scrutiny, and a lot more paperwork. Also, you will need significant initial capital just to get started. Public limited companies are perfect for large businesses who want to grow massively without the bounds of a private limited company. Last but not the least, the Section 8 company. If you're planning to do some good in the world through charity, education, or any social cause, a Section 8 company is the structure for you. And here are the pros and cons. Pros, you get a lot of tax benefits and exemptions, and profits are reinvested into the company's activities, so there's a strong focus on keeping the mission intact. And cons, you are restricted to only non-profit activities, so no dividends or personal profit, and compliance can be high. Also, you'll need to show how funds are being used. Section 8 companies are for those who are trying to make a positive impact in the world without any financial gain. And if you are one, you have all my respect and support. So now that we have walked through each of the business structures, here's a quick table for your reference and comparison. Feel free to pause the video and take a screenshot. As you can see, each has its own strengths and weaknesses. So how do you decide which one is the right for you? It all comes down to what you want for your business. Think about these factors. Do you want full control, or are you okay with sharing ownership? How much risk are you willing to take with your personal assets? Are you planning to raise funds from investors, or are you okay bootstrapping? And how comfortable are you with handling regulatory compliance? If you ask questions like these and take reference from the table previously showed, you might be able to narrow down on the one that's right for you. So if you've got the answer, let me know in the comments below, and thank you for watching. If after watching this video, you realize that a private limited company is the structure for you, I have made a step-by-step video on how to register a private limited company in India. And if you want to see more of us, you should definitely subscribe to the channel from down here.